China has lowered the threshold for foreign capital to invest in the country's property market, lifting a 10-year partial ban on foreign investment in real estate. However, industry insiders and foreigners say the new move may not be enough to attract new capital.
In China, housing prices in big cities like Shanghai are high. For me, I would choose to buy properties in my home country and rent an apartment here. It's more economical this way. In the past, housing prices had huge potential to go up, but now they are at a very high level already and couldn't rise much more.
A decision that was announced on Thursday by the Ministry of Commerce lifts a ban on buying houses for foreigners and branches of overseas institutions that have worked in China for less than 1 year. The government has also lowered requirements for registered capital for foreign-funded real estate enterprises. Under the new rule, the full payment of registered capital is no longer a precondition for applying for domestic and overseas loans.
The lifting of the ban comes at a time when the total supply in China's real estate market has surpassed total demand. In addition, housing prices are at a high level already, and the appeal for investment is not as high as in previous years.
Foreigners accounted for less than 2% of property buyers in Shanghai over the last decade.
I think anything that makes it easier for a foreigner who wants to stay in China to stay in China is a good thing. I think, though, because it's only a very small percentage of foreigners who want to stay here permanently, then I think it's not enough to make it easier for them to buy property. They have to have the security to know that they can stay, which means they have to have a visa or the so-called Chinese green card or something like that. Nobody's going to buy property unless they are sure that they can stay here permanently.
Analysts said the immediate impact of the new policy may not be obvious, but added that it is an indicator of greater openness in China's market.